Hey guys, in this video, we're going to talk about placing an iron fly or an iron butterfly strategy. Now, we already talked about butterflies and we already talked about iron condors, and we sort of grazed over the iron fly in the iron condor video that we do have up. But this video is going to be strictly about the iron fly. Now, exactly what is an iron fly and how would we use this in our trading? Well, we're going to open up our November monthlies here in Apple. And we're going to just go ahead and start to place a short put spread real quick in here. And we're going to do this at the money. So we're going to place this right at this 46 delta here. We're going to sell the 145s. We're going to purchase the 130s. All right. And that is already how we place half of an iron fly, and also how we start off with placing an iron condor. Now, on the flip side, on the call side here, for an iron condor, usually we would you try to stay as symmetrical as possible as far as our delta goes for our iron condors. So if our delta was 30 here on our short puts, then our short calls, the delta would be 30 as well. And then we just place a short call spread over here on the call side. But since we are placing an iron fly means that our short strike is going to be the same strike on the puts and the calls. So therefore, since we're at the 145 on the puts here with our short strike, that means the 145s on the call side is going to be our short strike as well. So we're going to go ahead and we're going to sell this 145 call, and then we are going to go ahead and buy back a 160 here. So we're symmetrical on each side. We're $15 away on each side. So this is a $15 wide iron fly that we're just placing. Now you'll notice it's basically an iron condor. We're just moving the short strike. So if we wanted to make an iron condor, we could just move these like this. Now we have a $10 wide iron condor. But instead, that short strike is going to be the same strike on each side, put and calls. Now you'll notice our max profit here is $935 on this. Max loss is $565. So credit received minus width of the strikes, that's going to be our max loss. Buying power effect is also going to be our max loss here. Our delta is a little bit short, probability of profit only 37%, with theta positive. Now you'll notice how all those change when we do turn this back into an iron condor, wrapping around that 40-ish delta. You can see here our max profit went down, our max loss went down as well, but we can make less than what we could before. And our probability of profit only goes up just a little bit. Our delta does go down a little bit, so we're more short delta here, and our theta stays relatively the same. So this is how you would play an iron fly strategy. And what you do is you want to play this in a relatively low IV market, because if you do have high IV, obviously, yes, you want that to be sucked out. But because we are playing at the money here, you might get big waves in here and high volatility. So if something's really low, you don't want to see a huge expansion to one side, but you just kind of want it to kind of stay in the middle here. That's basically when you're trying to play any sort of butterfly, not broken wing, just any sort of butterfly or flies. You want to have the stock price, the underlying price, stay in the gut of the butterfly. So for this iron fly, we want to stay as close as we can to 145 up until expiration. Now, this is a little far out for an iron fly. This is 62 days. A lot of people like to play these. If you look up, there's a Jim Olson iron fly. It is called. Jim Olson created this strategy. He plays this in SPX every morning. He puts it on, I believe he puts it on right around 10 o'clock and tries to get out at around 11:30 a.m. every single day. That's Eastern time. Just trying to collect 150 bucks on his contract. And I believe he goes really pretty far wide out. He goes $25 wide on each side, I believe. But you can play these daily, just trying to suck out some IV real quick. And a lot of times with the market, when you're playing SPX or SPY, something like that, you'll get like a nice pullback in the morning, and then about an hour or so later, it'll come back, or you kind of get a run up, and then an hour or so later, it kind of revert to the mean. So that's why they like playing those, because you can kind of gauge where that market is going to, what's going to happen, right? So, I mean, we get that run up, then you get that pullback, bam, IV collapses, you're in and out, take your profits and get out of there for the day. But this is just basically all an iron fly is. It's just an iron condor, and you're just placing your short strike right here on the same strike for each. So the puts here, 145s, the calls 145s, and then you can skew this however much you want. You know what I mean? You can try to collect a little bit more here on the put side if you want, go down to 120. You can move this up to around 140 as well, kind of break it off a little bit. Um, you can do a lot of things with an iron butterfly in here, but all in all, iron condor with the same strikes on the calls and the puts for your short strike there. Okay, guys, thanks for watching. Make sure to check us out on social media. We have attached the links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.